Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you from Global Alts in Miami by iConnections, and joining me for this segment, we have Richert. He's co-lead of the CLO Platform at Polen Capital, and we're here to discuss creating solutions for those investors who are looking for exposure to CLOs. It is great to have you with us, Rick. Welcome to the show. And it's interesting, I'm hearing CLOs a lot more this year than I have in the past. What do you think is in store for the group as it relates to the macro perspective?
Yeah, thanks for having me, Jill. Really nice to be here. Yeah, I think it's a really interesting product and a great setup right now. When we look across the landscape of all risk assets, just really everything in a sense of where we are on valuations, just think about it. Mag 7 is 33% PE, S&P is 23, high yield bond spreads are tight, IG bond spreads are tight. CLOs are unique in the sense that they are also tight, but there's two sides to the equation of a CLO, right? You have the loans that are also tight on the spread, so for plus 320, let's call it. But then the financing that you issue to buy those loans is also tight. Call it SOFR plus 170.
Right.
So that's, or even tighter than that. And that is at sort of the 95th percentile of tightness over 25 years.
Right.
The trick and why it's so interesting, that liability, once you lock that and price that in, that lasts for 13 years. So you're sitting there with cost of capital that is historically super cheap,
Right.
cannot change for 13 years, and all you need is the assets to mean revert from their historical tights to a little bit wider. Right now, CLO equity is delivering about 14% returns to their investors, but we think there's a lot of upside to that, because if the 170 will stay, if the 320 goes to 330, 340, 350, you're just going from 14, 15, 16, 17, 18% returns. So I think people are getting pretty excited about that. It's almost like owning a call option on spreads, but it's even better than that, because call options typically cost you something. You're owning this call option on spreads while being paid 14% returns to own that call option. So it's really a great setup.
It's almost an anomaly.
Yeah.
In theory, I mean, I don't think we'll get to like a 0% environment again. I mean, we have bigger issues if that's the case. So it seems as if, I don't want to say once in a lifetime opportunity, but this really is an anomaly when you think about the investment case in 2025.
I 100% agree with that. And I would call it more of a 1 in 10 year. This setup kind of comes around.
10, 15 years.
Yeah, exactly. Yeah. It's sort of like will occur. It's when the world feels pretty good. You know, I think risk assets are bid up, right? The world's feeling good, which is the driver of why the cost is so low. The beautiful thing is, again, you're locking that in for 13 years. So you're hoping then the world gets a little bit more volatile. The best thing, to make the point even more dramatic, the single best year to issue and own CLO equity was 2007.
Right.
I don't have to say anything else.
I mean, there was peak excitement, and then we saw what happened from there.
Got super volatile.
It's actually an interesting indicator, right? When you think about it from a macro perspective and what this CLO market is indicating, how we should be thinking about, okay, what's next on the horizon, but there's a lot of client demand as well. How are they using them? How are they allocating in their portfolios, whether it's looking to decouple from the traditional 60-40 or look for other ways to not be so correlative to the market?
Yeah.
How are they leveraging them?
Yeah, absolutely. So there definitely it's traditionally been a very institutional asset class. You know, the big companies and big managers or the owners, big pension funds or the owners. It is being pushed as it's becoming more popular and people are seeing the characteristics of it. It is getting pushed deeper and lower into the retail channel. Lots of different things, ETFs, interval funds, lots of different structures are being created to give this access to the retail base.
Yeah, we're familiar with ETF wrappers, but when you think about the CLO environment, are there different liquidity profiles? Are they used in a different use case in a portfolio? What should investors know? Let's call it outside of the institutional mindset.
Yeah. I think the best way to own CLO equity is a core allocation that you set and forget, really. And so the most popular way to do it is a drawdown structured fund, and that usually has like a 10-year average life. That's the best way to do it. There are other ways to do it. Like I said, ETFs are a popular phenomena as well. But yeah, I would say a drawdown structure. So some people will think of this asset class as a complement or even a replacement for private equity.
Right.
Right? Because if you think about those two risks, where are you getting the return? If you're a private equity investor, you're just in the equity of LBOs, right? But there's a J curve. Put your money in, you don't know when it's going to get sold or IPO'd, and it tends to be like a 7 or 8 year J curve.
Well, it's been a little bit longer now, too.
Yeah, and extended, absolutely. Rates have not helped.
Do you select your underlying almost the same way that you would analyze an equity in terms of different sectors or what looks more attractive? So, for example, at CLOs, software tech has been a hot spot. How do you think about the underlying when you're doing your selection process?
Yeah, 100%. Yes, it's a line by line deep dive credit analysis. The real driver is finding consistent free cash flow producing companies. But we definitely overlay industry views as well. We don't think energy makes a lot of sense inside a CLO because it's super deeply cyclical.
Right.
And this is really a game of not making mistakes. The structure is quite smart, and it is 10 times structural leverage. So probably the single biggest alpha a good manager can deliver is being smart about not making mistakes.
All right, appreciate the insight, Rick. Thanks for joining us on Trade Talks, and thanks for joining me from Global Alts. I'm Jill Malandrino.